All right, so glad to be back. I know we had a break. It was a holiday, so it seemed like it's been a long time since we've been together. I'm glad to be back in the lab with everybody. We're talking about my favorite subject and get into another training of the lessons that we go through and talk about in our course. So we got some good training to go into tonight. But before we do that, I would see if I can get Miss Thor to Thor, are you able to
Yes, I'm
take over
ready.
the disclaimer for us?
Yes, I'm ready.
Okay.
Okay. The disclaimer. Futures and Commodities 101 Trading Group Disclaimer. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means that you alone are responsible for your actions in any trading or investing activities.
Oh wow, thank you, Thor. Appreciate that. And you know,
Welcome.
I want to ask if you can do another big favor for us and cover the quizzes. I know we had two weeks worth, which is about
Yes,
four quizzes.
yes, we do. Okay. Quiz number 1. A bottom formation indicates that the market has been trading in a downward and is possibly changing direction to trade in an uptrend. I'll read it again. A bottom formation indicates that the market has been trading in a downward trend and is possibly changing direction to trade in an uptrend. Is this A, false, B, true, or C, not sure? True.
Somebody said true.
True.
Okay, we have another true.
Yeah, I
Okay.
was saying false.
Somebody said
Somebody said
false.
false. Yeah,
Somebody said false.
I think I heard a false.
Yeah, that is.
Okay. Read it one more time for us, Thor.
Okay. So, a bottom formation indicates that the market has been trading in a downward trend and is possibly changing direction to trade in an upward trend. Is this a true? Is it a false statement, B, a true statement, or C, not sure?
True.
Okay. So Jamal is saying true. And
Well,
anyone
yes,
else?
I said true. That's
Okay.
all right. So help us out? What's the correct answer?
Okay, the answer is B, which is true.
Absolutely. Great
Okay.
job. Great job.
It's 27th. Let me go to the next one. Okay. So, and the other quiz is a question. What does the number 1 indicate in a bottom formation? So the bottom formation, the number 1 is at the bottom formation. What does that indicate? A, resistance, B, entry, C, nothing, D, support, E, not sure.
One more time, Thor.
Okay. What does the number 1 indicate in a bottom formation? Is it A, resistance, B, entry, C, nothing, D, support, or E, not show?
D, support.
D, support.
Support,
Okay.
yeah.
And Jamal is saying D, support as well.
Yep.
Yeah. Anyone has a different answer? Okay. So yes, it's D, support. Have I lost you? Hello?
Great job. Great
Okay.
job.
Okay. So this,
Everybody, y'all doing great.
okay. So on the 2nd of September, we had another quiz. And this is it. So I am long 1 futures contract in live cattle. I am long 1 futures contract in live cattle. The market is moving in my favor and I am in profit. Which direction am I trading the market? And do I need to keep using a stop loss? So I'll read it again. The market, or I am long 1 futures contract in live cattle. The market is moving in my favor and I am in profit. Which direction am I trading the market? And do I need to keep using a stop loss? Okay, so A, trading the market down and trail the market with a stop loss. So the first thing, what I'm doing when I'm doing that is A, trading the market down and trail the market with a stop loss. Or B, trading the market up and no longer need to have a stop loss. Or C, trading the market up and keep trading the market with a stop loss. Or D, trading the market down and cancel the stop loss. And E, not show.
C.
C, Charlie.
Okay.
He all in there all day long.
And Jamal says C. Tanya says C.
Pam said C. I think the sheet says C.
Okay. So it's C. It's C. So C says we are trading the market up. And we keep trading the market with a stop loss. Remember, one of the rules, or always trade with a stop loss.
Yep.
And
And we had one more though.
yes, we have one more on the 4th. Okay. Formations form over and over again on the charts. Which number of points is the most important with the top and bottom formation? So I'll read it again. Formations form over and over again on the charts. Which number point is the most important with the top and bottom formations? Is it A, number 3, B, number 1, C, number 2, D, not sure, or E, none of the above? Do you want me to read it again?
C.
Okay, I'm seeing Jamal says C, P. Brooks says C.
Yep.
Okay. Anyone differ? Tanya says C.
What's C?
Okay.
What's C though? C is
Right,
what?
C is number 2.
Yeah.
C is not.
Entry,
Number
point of
2.
entry.
C.
Right.
Very good.
That is
Very
correct.
good.
Yeah. And
Our,
that is,
our, our entry is so important. It's very important. We can see a formation all day long, but if we don't enter the market right,
mhm.
it really doesn't matter. Great job. All right, let's jump into some training tonight. Johnny B, what we got going, man?
We got the um um we got the disclaimer, please.
Yeah, Thor already read it for us.
What am I thinking? Okay, about our book
Yeah, we got a
and
book that,
understanding
Boy,
formations.
you better cop that book, baby.
yes, sir. We got a book that really talks about this amazing market that we like to talk about, the futures market, where these commodity trade at. And if you really want to be serious about this, learn this, make sure you get that book because it goes way more in depth with the lessons of this learning system that we teach. So do yourself a huge favor and get that book. All right, Johnny, what we got, man?
Okay, understanding formations. 1, 2, 3, top support and resistance, downtrends, lesson 7 in the manual.
All right, what we're gonna go over tonight can be found in lesson 7 in that book we just talked about, everybody. So
Yep.
let's get into doing some more work on the charts tonight. So take it away, Johnny. We'll get us started.
Okay, how does the top formation form on the chart? Okay, the top formation forms after an uptrend, signals a reversal of the price in the market, with the price momentum then moving to the downside, which is known as downtrend.
So we've been in we was in an uptrend basically, right?
Yep.
And then the market started to make a reversal, which means that it's going to change directions and start maybe trade down in a downtrend. And this is how a top formation forms on the chart. It starts to make a top. So when we have a top formation, Johnny, um, let me ask you a question, man, just to make sure everybody's clear on this. When we have a top formation on the chart, that means that the market was previously in a uptrend and now it's making a reversal and starting to change direction. And now that it's changing direction and maybe going into a downtrend, is that something we can take advantage of too? A downtrend?
Absolutely. Remember, one of the rules, we trade market up and down.
Right. That's right. Matter of fact, Johnny, I think I do that more than the up, trading it up, right?
Yes, sir.
Yeah. All right, Johnny.
Okay, so 1, 2, 3 occurs in a top formation known as support and resistance. There can be multiple 2s and 3s on the chart. We'll cover that here in a minute. Okay, so whenever you're trying to work out your trend, all right, or your top formation, the number one, I don't care which chart you're on, is the highest point on the chart. It's known as resistance. Okay. Number 2 is formed when the market trades away from the number 1, right? And hits support and stops. Okay. And a number 3 is formed when the market trades back towards the number 1. And it is our risk exit from the market, is known as part of the resistance level. Okay. Do you want to clarify any of that?
Yeah, well, you did a great job. We just want to make sure everybody is clear on the fact that we have a number 1 on the chart, which is indicating and telling us this is the highest price on that chart. Like Johnny said, no matter what chart it is we're looking at, in a top formation, your number 1 is going to be the highest price that you see on the chart. And then back to the number 3 point that you made. At number 3, that's going to be our exit strategy to get out of our trade. So we use the number 3 for that reason. But if we have a number 1 as our resistance, that means the number 2 is going to be our support, like Johnny said. And then the number 3 is going to be trading back to test that number 1 resistance. And when the testing of that number 1 fails, that leaves behind our number 3. Just like Johnny said, great job, man. I think, Johnny, most important thing is, when it comes to the top formation, we understand that this means that we're going to be trading the market down. And
Correct.
And everybody's clear on that, right, Johnny? Everybody's clear on the fact that we can trade the market down, and what that looks like. We can buy a contract and we can sell a contract, but when we trade the market down, which one do we do first?
You sell the contract?
Very good. Very good. All right.
So we're selling high and buying low.
Very
Okay.
good.
All right. So if the number 1 is the highest point on the chart, the number 2, like I said, is formed when it trades away from the number 1 and then hits support and then reverses back towards the number 1. So price moves the number 2 to the downside. So when you look at a downtrend, okay, the price moves the number 2 to the downside, but always lower than the number 1 and the number 3. So each number 2 is lower than the previous number 2, meaning it makes lower lows and lower highs, right? The number 3, as it trades back towards the number 1, makes a new high, a new lower high, and reverses and goes back towards the number 2. And that price move to the downside will always be it'll be lower highs and lower lows. All right. So it will be below the number 2, right? And then it will reverse back and form another 2, which is lower than the previous number 2. And then it'll trade back down, lower than the previous number 2. So the number 1, okay, and the number 3 is lower than the previous number 3. Okay, so your number 1 is the highest point on the chart, and then each consecutive 3 is lower than the previous. All right. And that then, so for each confirmation, it should run between 10 to 14 days is recommended before entering the trade. Okay.
Yeah, Johnny, right here on this, I want to just point out something. But you go ahead. I'm gonna point out something here in a minute. Go ahead.
I had a question.
Well, the main, oh, so there was a question. Go ahead, Jamal.
Okay, so for the 10 to 14 day confirmation, do you go back every day and check that trade to see the integrity of the number of the formation, like where the two is, if when the two is being tested? Do you go back and watch it, check it every day or every other day? Because I didn't actually see how to go about that even in the manual. So that's what I wanted to know.
Yeah. So on the 10 to 14 day confirmation, what they're referring to is when you see a top or bottom formation forming on the chart, the time frame that it takes to form that formation will be ideal if it's within a 10 to 14 day time frame. So you're looking at the bottom of your chart, you can see, when the number one hit the chart and then all the way to the number three, the time frame where you see this formation form, if it's within that 2 week time frame, that's going to be an ideal formation that you want to. That's what you want to see, because then your one, your two, and your three won't be so far apart from each other.
Right. Okay.
And it's the structure of the chart that we want to see, because that means that if that same one, two, and three took a whole month to form, these numbers are going to be a good distance away from each other on the chart.
Mm-hmm.
So now when you start to try to figure out where you're gonna put your stop loss, you're gonna have to risk way more than you probably would if you would have had a 2 week
Got it.
time frame. Does that make sense?
Yeah. So I got one more question. When you put in a stop loss, with a stop loss, you are still guaranteed to lose a little bit of money every time. Is that because that's what I was getting when I was reading the manual? Like no matter what, it'll be a measure of money loss, not a whole bunch. If it's calculated correctly. Is that correct in what I was getting?
Didn't quite understand that, but
Okay, so like when you put in a trade, right, and you put in your stop loss, there's a stop loss. I know an immediate stop loss takes you out the market. A trailing stop loss has you to ride along with the trade and don't give you a whole bunch to lose, the trailing stop loss. But I'm talking about a stop loss. Will the stop loss take you immediately out of the market without losing any money? Because I believe that's what I heard. And the trailing lets you ride along a little bit. You might lose a little bit, and then it locks you out at a certain time that you
uh,
put in.
make sure we understand how the stop loss works.
Mm.
If you put a stop loss at 550, whether it's a manual stop loss or trailing stop loss, that's where you're going to get stopped out. If the market hit that price, that's where you'll get stopped out. Doesn't matter if you have a manual or a trailing stop loss. The only difference between a manual and a trailing stop loss is the manual, if you're doing it yourself, you have to keep logging in and moving your stop loss where
Okay.
you want it to be, or
Okay.
because
Okay.
the
All right.
broker
I
wants
got
to
it now.
call the broker.
I got it.
And if you got a trailing stop loss, once you set it and you say, I want this trailing stop loss to trail behind the market by 20 points. So when the market starts to move up or down, your stop loss is going to trail behind the market 20 points behind. Does that make sense?
Yeah, and at that 20th point, you coming out of there.
If the market was to trade down or up 20 points to where your stop loss is, that's where you'd be stopped out.
All right, I got it. For
Okay. Okay, Johnny, what you got?
Okay, this is I just jumped on and grabbed the first thing. This is live cattle, October. Okay, it's a 6-month chart. So the highest point on the chart is a 1. Notice that it traded back away from the number 1, right?
Mm-hmm.
Which basically formed a 2, came back towards the number 1, failed to make a new number 1, and now has reversed itself again. Now the question is this another number 2, or is it going to go back? So this was August 27th and November 2nd. How many days is that? August 27th to September 2nd.
Almost a week,
Six days.
literally.
Is that 10 to 14 days?
It's in between.
If it's August 22nd, 22nd, and 9 is 31, and 2, 9, and 2 is 11 days.
August 27th,
Oh, 27th. Okay, sorry.
27, yeah.
right?
It's just under a week.
So is that 10 to 14 days?
No,
It's
it's
like
not.
6 or 7.
Right. So basically, would we want to jump on this? Has this confirmed yet?
No,
No, you said 14 days.
10 to 14 days.
So
And if,
within that
Right.
same 14 days.
So
period.
even though a 1, 2, 3 top may have formed, we may want to let it go ahead and do, if this is a number 2 here, in other words, if it trades higher tomorrow and does not exceed this other number 3, in other words, makes another lower low, we may really start to look at this.
So
And
John,
then, so where would I'm sorry, go ahead.
I got a question really quick. So would this right here be your confirmation within that 14-day span that you're waiting for before you go in and make your first buy order?
First sell.
Got it.
Yes.
Got it. Thank you.
Okay. So our entry point basically would be just below the number 2, and our stop loss would be at the number 3 because we're selling an order, right? We're selling a contract. And we expect it then to make lower lows and lower highs. And our stop loss, if you can afford it, would be at your number 3. Okay.
Yes.
Let me see
Yes.
if I can find
Thank you.
another.
Thank you.
Let me see if I can find another chart.
Hey, Johnny, are you able to go
Yes,
to
sir.
Are you able to go to the mini and the micro?
Yes, sir.
Yes, sir. Yes, sir.
And when you go to the mini and the micro, once you get there, let's look at since I posted the XRP was in the futures market. Now let's look at the XRP micro chart.
It is.
And that's a honor.
So up under that micro and mini, you should see XRP.
Oh, wow. When did that start trading?
Yeah, that's recent.
Really recent.
Yeah, we got some background noise. If everybody can mute out, kind of clicking going. Yeah,
Wow.
how about that, Johnny? So which contract money are you looking at, Johnny?
October.
Okay, can you find that September? If you can go back. Go back one, see. Okay. All right, so on this, we got a 6 month right here, right, Johnny?
Yes, sir.
So on this chart right here, I wanted to see if we could see what we kind of went over just tonight. Basically, we talked about market being in the uptrend and then reaching a point where it starts to make a reversal, and that leaves our number one on the chart. So we traded up to an uptrend, and then we hit a point where we hit with resistance, and that leaves our number one on the chart. Then Johnny said that the market trades away from the number one, trades down, and finally hits a point where it doesn't want to go lower, so it turns around, but it leaves our support, our number two on the chart. So if you can see, Johnny is laying it out for you. So we go down, and now we have our number two. And then the market's trading up, going back toward the number one, like Johnny talked about, but did not go all the way up. It actually turned back around again and left the number three. Now we have our 1, 2, 3 top formation that we just went over tonight. Now you see that we had a 1, 2, 3 top, and then that 1, 2, 3 top means that we're going to be looking to get in the market and trade it in what direction? Down.
Brother Delvin, I got a question right quick. On this chart, in between the gaps, the 2 and the 3, there's a gap. I remember us going over it, but I forgot the content of what was said. And then even when I read it on, my mind still goes like, okay, this is where you ask some questions again. Because you explained that gap right there, so that way I can understand the whole sequence of it.
Okay, so let's cover the gaps real quick to make sure we understand that. All right, the market closed. Let's go with John. That first gap we got over to the left on that uptrend right here. Yeah, where did the market close right here?
This one?
Yeah.
Okay, it closed at 358.57.
358.57 where the market closed. Okay.
Yeah, 359.
359. All right.
Right.
So when the market closes at 359, and then the next trading session happens when the market opens back up, instead of opening back up at 359 where it closed at, instead it opened down at what price?
345.
345. It closed at 359, but when it opened up at 345. So because it didn't trade down to that price, it opened up already at that price. It left a gap on the chart. That's how these gaps form. The market closed at one price and opened up at a different price. Had it opened back up at 359, there wouldn't have been no gap on the chart. But it didn't do that. It opened up way down from where it closed, and that leaves the gap on the chart. Now, this gap that Johnny just pointed out to us right here at the coming down from that number one, has that gap been filled?
Yes.
Yes, it has.
You said, you
Yeah.
said yes.
Yes.
This gap,
No. Not that
No,
gap.
no, the next one.
The gap that
Right,
you.
okay,
right
this
between
one.
the 2 and the 3.
That's it.
Yeah. Yeah, I'm talking about the one between the number one and the number two that we just covered.
Oh, let me see.
No, not
No, it
yet.
has not
No,
been
not
filled.
yet. It hasn't been filled yet.
How we close the gap, the market has to trade through that area where the gap is, right?
Yes.
And that's how we close the gap. Now
So
you
when,
mentioned that you all mentioned that the gap had been closed between the 2 and the 3, and that's correct because the market did come down and trade through that area, closing the gap. Everybody see that,
Yes,
Yes.
and that's how the gap is filled. Does that help?
absolutely. Absolutely.
All right,
Thank you.
perfect. Now going back to this top formation, we had a quiz that we said, which is our most important number, and you all told me that the most important number would be what number?
2.
number 2,
And the number two is the most important because of what?
That's your.
Support, and that's where you get in
That's
the
our
money.
entry point.
So in this case, will we be looking to get in above the number two or below the number two?
below.
Below.
Very good. So
Low.
our order will be placed to get filled just below the number two. Now, what kind of order would we place to get into this trade so that we can trade this top formation? Who can tell me?
Sell. No.
Sell.
Sell order. Yeah. Sell.
What did you say, Alice?
Sell.
Limit.
We will place a limit order, and that limit order would be to sell. Very good.
Yeah.
That's right. It will be a limit order, and it will be to sell. We want the market to come down to the price where we want to enter the market, and then we get filled when the market trades to our order. Now, in this particular case, if we have our order below the number two in the market, and our limit order is there, did we get filled on this trade?
Hold on. Say that again.
We have our limit order to get filled just below the number two.
Mm-hmm.
Did our order get filled?
Yes.
Okay, Alice said yes. Anybody else?
Good.
Okay, very good, Alice.
Yeah,
You guys just told me that we would put our order just below the number two. We would use the number two as our entry. If we have our order right there where Johnny has his horizontal line, did the market trade down to that line? We have a 1, 2, 3. Did the market come down to the line?
Yeah.
Yeah.
Yes.
Yes.
Yeah. So after we had our 3, the market came down, traded to our limit order, and our order was filled. Is everybody with me?
Yeah.
yes.
Yes, I am.
Now, if you would have been in this trade, your order would have got filled just below the number two. And then what happened after that?
Kept trading down. No, it went back up. It went back up. I'm sorry. It went back up to number 3.
No, it didn't go back to the number 3, did it?
No, no, I'm sorry. No, it didn't.
No,
I'm
it did
looking at
not.
something else. I'm looking at something totally different. No, it didn't.
Just
So
follow,
what you want
follow
to be
my
looking at?
cursor.
You want to be looking
Follow
at
my
that bar.
cursor. It would have got filled right here.
There
Right.
you go.
Okay. It went back up. Now, if your stop loss was here at the 3 and it traded to right here, did you get stopped out?
No.
No.
Okay, correct. So then it traded back down.
Mm-hmm.
Okay. Are you in profit right here?
Yes.
Yes.
Okay. Then it started trading back. Are you at profit right here?
Ooh.
Yes.
Yes. No, no, yes, you are. Yes, you are. Oh, wait.
No, you're not.
No, you're
There's
not.
a gap.
No.
Yeah, there's a
Here's
gap.
where
That's right.
No.
here's where you got in
Mm-hmm.
at 310,
Mm-hmm.
traded back up.
Mm-hmm.
So at 317, you're not in profit, right?
Right.
What happened the next day when it opened up?
Shot up 344. Opened up at 344.
What else happened?
Started
Traded
Okay.
trading
down.
up now.
Started trading
That's it.
down. Downward trend.
You got
It traded
stumped
back up.
out.
It traded back up and tested what?
Number 3.
Very good. It went back up and tested the number 3. Traded right up to the number 3, right?
Yeah.
Yep. You'd have been stumped out by then.
Yeah. Very good. Very good. So what we want to understand from this is that the 1, 2, 3 took place and formed on the chart. The opportunity to get into a trade was there. There was an opportunity to have a profit. But whether or not you kept your profit or not will be determined on how you trailing behind the market, because the market turned back around and went to trade back up, which took you into a loss. So whether or not you took a profit on this trade would be determined on how you trailed it with your stop loss.
Sorry, I got knocked off for a second.
No problem. Did everybody understand that illustration we just went over?
Yeah, but I got a question. I wasn't going to ask, but I'm going to ask this question. I got a question. Can you go back to the chart? Is it possible to go back to the chart, Mr. Scott, please? All right. So you stay in the trade right here at the second number 2. You trade it up, and then you don't have a stop loss for that 3. So you trail it to go down to the third 2 to be stopped out down here. So because you're going out of profit going up, then you're going back into profit all the way down to this third 2. So you would get your stop loss kicked in like shortly after the 2. Would that be
Let
correct?
me ask you a question. All right. So we came down here to this number 2,
Yes.
and we said there's a 1, 2, 3 formation formed, right?
Mhm.
Well, I guess I was a little wrong on this. So if this is our entry point,
Uh-huh.
right?
Uh-huh.
So right here, we got filled,
Uh-huh.
right?
Yes.
We got filled with a sell order,
Yes.
all right? Our stop loss is what kind of order?
A buy order.
Okay. So if we put a buy order in at this number 3,
Uh-huh.
okay, what happened when it traded above that number 3?
You went out of profit.
What happened?
You got out
What
of
happened?
it because you had a
When-
stop loss in.
You had a stop loss, yeah, and you would have gone out.
Right?
Yeah.
We bought the contract back that we sold. Now we're no longer in the market. Now, do we wait then for a new number 1, 2, 3 to form?
No, because it could be too risky. Hello?
Well, let me ask you a question. If the market trades down to this number 2,
Uh-huh.
trades back up and forms a lower number 3,
Wait a minute.
then trades back down and forms not another number 2, this is going to bring another part of the equation in. Do we look at getting in the market on this downtrend?
Yes.
You can,
I
yes.
would think so.
Yes.
Good.
What else has formed? What else have we?
You could.
If you just look at this chart real quick, what else do you see that's formed that has happened to this chart? Something we talk all the time. No. Here's a low. Here's a high.
And don't forget,
What is our target? What is our target?
Downtrend.
What is our target or our exit target if we got in right here? What is our exit strategy?
Number
I know y'all know it. When we look at getting into a chart, how do we do it?
With
Hold
a
on,
tool.
say that again. Say that again.
Highest point on the chart,
Yeah, because I'm confused as all.
lowest part of the chart. And then what do we do with those two numbers? We add them together, and then
See
what
if
do
it's
we
a
do?
reversal.
Then divide them.
50% retracement.
Retracement, that's it.
50%
Retracement.
retracement, outstanding. So has this done a 50% retracement? If you can't already see it on the board, you know it has.
Yes, it has.
Yes, it
So has it hit our target already?
Yep.
So again, I asked, do we get into the trade?
Yes.
No.
What do you think?
I think
Delvin?
so.
Don't forget
Well,
another
get in.
50% retracement.
I think, yeah, after it made the 50% retracement, it's time for us to
Wait
get
for a
in.
new formation to form.
There we go. What happened to Delvin? Did
I'm
we-
ready.
did we-
I'm listening.
Digging in the grass, I asked to stop digging the grass.
Yeah, because I got lost for a moment.
What you doing now? No, we're not close.
You're not the only one.
I got lost for a moment. So
I'll put it in there. I don't want-
Well, I think when Johnny asked you all what is our target, it seemed like that's where everybody got lost because we seem to forgot. When we get in the trade, we always have a target that we think are looking to see the market trade to. So when we went over the 50% retracement, we went
That's the
over and
target.
over and over and over as what our 50% retracement is our what?
Target.
That's right. It's our target.
Because you can
So
make profit there.
that's what Johnny was looking for. The target is the 50% retracement. So we always look at the 50% retracement and want to know what a 50% retracement is. So I think that's where people got confused. They forgot about the fact what the answer to that question. Immediately, folks will jump in your head that it's the 50% retracement. That's the target.
Look at the reed, look at the shovel.
Okay.
And it's 2.9175 is the 50% retracement calculation, correct?
There on top of the thing. I said in front of the door on the floor. It's
Now let's just do it real quick if you don't mind.
a tiny.
Probably got some
Take three.
background speaking up from it.
Hold on,
Take
hold on.
379.
Yeah. Uh-huh.
Take
And then the lowest point.
205.
205.
Add them together. Divide them by 2.
Divide by 2.
Divided by 2. Okay, I got it.
What's the number?
Hold on. 2.92. Yeah, so that's it.
So it's made its 50% retracement. Now the question is this going to go into a sideways channel? Is it going to go back up? What's it going to do? Who knows? This is the risky part of the business, folks. It's easy to trade this after the fact. But before we don't have any clue. So if we see a 1, 2, 3 form and we enter the market at just below the 2, right? Then if this is, and when he said 10 to 14 days to form, if we do, at least it limits our risk to getting into the market. Right? Now I'll be honest with you, every time I've touched XRP, I've lost my butt. You know.
Yeah. And here's the thing too. I want to make sure everybody's clear on the fact that we went over a 1, 2, 3 top formation on this chart. And then we would have had an order in to get filled, which did get filled. And then what happened? We did go into profit. But then what happened? The market changed direction and took our profits away.
And so real question. So if we did it right, how much did we lose? 10% of our net holdings. So we've got 10 more chances to make it right. Or 9 more chances. Actually, it's more than that because every subsequent trade, you're only going to do 10%. Right? You're only going to risk 10% of your holdings on one trade.
Okay, I had another question. Right here at the last number 2, where you said it gets risky, would that be another 10 to 14 days to watch and see how it forms?
Absolutely.
Okay.
And then also remember this too. When we see a 1, 2, 3 top formation form on the chart, it's an opportunity to to look at getting into the market, trading it to the downside, right?
Yeah.
But we always want to know what that 50% retracement level is, because sometimes it doesn't make sense to take the trade if the market has already traded and reached our target. If the market's already traded down to where your 50% retracement level is, what would be the point of getting in the trade?
But
Not much.
can I just ask?
It
I
wouldn't
also
be no
noticed that
point.
the market started to go sideways. Does it make sense to go into the market at the last 2 when it seemed to be going sideways? Can you make money when the market going sideways? Because it's not really going much up or down.
Yeah, you remember the last time you asked that, I told you about the fact that these 3 formations we watch for, the sideways channel is my favorite one. So Absolutely, we can make money in the sideways channel. Matter of fact, we can get position to catch the market when it breaks out of the channel. And that's why I love to trade the channel so much. Because in this particular case, it's trading sideways. It's gonna break out and go either up or down.
Mm-hmm.
When it breaks out of the channel, we'll be in position to catch it. Let me give you a perfect example of this. Johnny, can you go to October Sugar? I was posting about October Sugar because I was talking about the fact that it was in a sideways channel and it broke out of the channel. And I want you to take a look at what we talking about when you say, can we make money when the market's trading sideways? So do you see over here where the market was in the sideways channel?
Mm-hmm.
And then the last 3 or 4 days, you see what happened?
It went down.
See how it broke out of that channel? You see those
Mm-hmm.
last 3 or 4 bars on the chart?
Mm-hmm. Yes.
So
Well,
if we were watching,
how do you know when it's in a, how do you know then when it's in a sideways channel, which way to trade out when it comes out? And how do you anticipate where to your limit order in terms of either going long or short, because it could go either way. So how do you determine how to place your trade?
But
okay, that's what I was just explaining to you before we went to this chart. That we can be at home, we can be in position to catch it on the breakout. So we can have an order in to catch it, get filled when the market breaks out to the upside, or we can have an order placed to catch it when it breaks out to the downside. It's going to break out
Oh,
one way or the other.
so you put in
And,
two orders.
and
yes.
one of our orders is going to get filled, right? And you
Yeah.
see in this particular case, it broke out of the channel and traded which way?
Down.
Down. So if I had an order in to sell when it broke out of the channel, my order would have been filled and I would have been in profit or loss.
Profit.
Profit.
Right. One of the things we always talked about when it comes to the sideways channel, I'm gonna test to see if y'all been paying attention to this. When the market trades in a sideways channel, typically in most cases, when it breaks out of the channel, it tends to do what?
Go down.
Go down.
Continue in the direction.
As long it continues in that direction as long as it has stayed in the sideways channel.
Bam.
Okay.
Y'all see that? Do you see the
Sure
sideways
is.
channel?
Yeah. And
Then
inside.
you see the breakout?
Yeah.
Don't it look like it's about the same time frame? See how close it is?
Mm-hmm.
I see. Yes.
And I remember reading inside the manual, they show you how to put in a trade for a sideways channel too.
I just want to ask another question. So we're making money going down, but you did place an order to buy also. What
Mm-hmm.
happens there? Are you going to remove the order? Because won't we be losing money if we take the profit going down? No, we would not lose any money at no. Seeing that we making money going down, the one that we place above, what happens there?
Okay, so that order didn't get filled, right? The buy order didn't get filled. The sell order got
Right.
filled. So what happens in this particular case? The sell order can become my stop loss. Or I can cancel it outright,
Oh,
but the one that get filled is going to be the order that's going to get me in the market, and the other order can now become my stop loss. Does that make sense?
Mm-hmm.
yeah.
That works real good on a tight sideways chart. But if it's too volatile, then your stop loss would be too far out.
Yeah, and you can cancel it, place it where you want to.
You could cancel the
Right.
order also, you're saying?
Like Johnny is making the point that if it's a volatile market, you may want to just cancel that order and place and put the stop loss
Okay.
where you want it at.
Right. So
Right,
let's
that was
say,
my next question.
okay,
My next
so
question was
real
if it was
quickly,
going to, if you could move it.
Inga, real quick. So if you put a buy order in, it's 1712. And you put a sell order in at 1590.
Mm-hmm.
All right. If you can afford the difference between 17 05 and 1590, right? So this buy order will become the stop loss for the sell order that you did at 1590.
Right.
So and then as this goes down, you would move this buy order down closer for a stop loss.
That is what I wanted to ask, if I can move it down. So it means then I would lose less the longer it stays to go that route. Yeah, that's what I wanted to know. Yeah.
That's correct. So as this market goes down, you move your buy order down. And so when you get totally in profit, if it goes back up and stops you out, you still maintained you still didn't lose any money. You didn't gain as much as you wanted, but you still preserved the profit you had already made.
You're right. Mm-hmm.
All right.
Yeah.
All right.
Yeah.
Great questions tonight, everybody. Guess we had more of an interactive night, so we didn't get around to our Q&A questions since we pretty much had them throughout the training. But did everybody get their questions answered tonight? Is there any more questions before we
No,
wrap it up?
no, I don't have any questions, but I have a comment.
Okay.
So, Brother Jamal, you came on and you left a recording about Charles Schwab,
Uh-huh.
and I responded to it.
Okay.
So I'm